Hey, good morning, everybody. Bob, Trade Genius, 21st of September. And I'm going to start off with gold. There's a lot of talk out there this weekend about this and these liquidity injections by the Federal Reserve. And I'm just going to try to just simply explain the different narratives that are being floated out there. And, and quite frankly, everybody's guessing because the Federal Reserve is so opaque, which is a problem in and of itself. And so I think people took the right decision and got cautious. But essentially, the banks that are part of the Federal Reserve System, I think there's like 19 of them are considered primary dealers. And they're required to participate in treasury auctions. That means that the United States government can never have a failed auction in selling their debt. And so the banks put it onto their balance sheet. And you get to a point where they cannot absorb any more of these assets, so that they could swap them with the Federal Reserve for cash, and then they could swap them back. But that's not the only thing they can repo. They can repo basically anything on their balance sheet. And when you get to quarter end, like we're coming up on now, is that they like to make their balance sheets look pretty. I mean, it's absolute fraud. It drives you nuts. But that's what they do. And then usually the week after, it settles back down. But this time, they're going for 7 days before, and then they're going to do 7 days after to October 10th, where they're pumping almost $750 billion of net new fiat creation of dollars into the system. And so people are just like, whoa, that woke people up. And so one of the narratives is that they've changed the rules, that the big banks, the banks that can fail, they're considered systemically important, they have to hold on to enough reserves that they can operate 30 days without going to the Fed window for cash. And so those are that $1.4 trillion of what they call excess reserves that are sitting on their balance sheets, which they get paid for, by the way, for not lending. And just like the farmers get paid for not farming. And so they didn't participate in providing the liquidity for other banks, even though interest rates went to 10%. They just were not allowed to participate. So we have an imbalance here that you have to look at. The second narrative is that there's a whole bunch of illiquid assets out there that somebody needs to get off the books before the end of the quarter. And the third one is that the Chinese, which are also through Hong Kong, participate in this primary dealer market too. Like HSBC, and I think there's another one, that the Chinese are dollars short, and they're selling their assets, and they're not going to come back. They just want the cash. Here's your treasuries. We're not participating. We're out. And because the Chinese are short of dollars. And so those are the things that are going on. One of them can easily be fixed. The second one is concerning. And the third one is that there's something seriously wrong in China. And I'm kind of leaning that way, because the Chinese now also have been selling assets from around the world to bring cash home. And they're dollars short. And that's what's been causing the problem with us. And that's why Trump has been screaming at the Fed to relieve this pressure, because the dollar is too strong relative to our counterparties. It hurts our exporters. At the same time, there are a lot of countries, because we're the reserve currency, we're forcing deflation onto the world by doing this. And I'm not sure what the motivation is, but it's causing a problem. And so at some point it will break, and maybe it broke this week. But we just won't know until after the fact, when everybody said we never saw it coming and we have another financial crisis. So, long story short, this is why we have been at Trade Genius so insistent. And that we're going now 18 months now telling people, trim your stock portfolios. You don't need to be fully invested. You need to raise cash. You need to have cash. And In fact, you need to have cash at home too, just in case you need it, because the ATMs might come down again. Look, I don't trust these people at all. They'll lie to you until the very end, and you need to take responsibility for yourself. So you need to have some cash set away. That's why we've also been insistent that Bitcoin is not dead, or any of the alts that you prefer, but I'll just use cryptocurrencies as generic, is that you need to have money that is outside the banking system, completely outside the banking system. And the third thing is, how do you leverage the price of the precious metals? And that's with miners. And that's where we are. And I don't see anything changing. I know there's a lot of hand wringers out there saying we're going to go into deflationary environment. Look, the central banks cannot survive a deflationary collapse. They just will not be allowed to participate again. So they will do whatever they have to do to shove fiat into the system. We will die from an inflation explosion, not a deflationary collapse. Or the inflation explosion will cause and become a deflationary collapse. They will do whatever they have to do. They're just not going to let this system fail, because all the banks around the world will fail with them. And the American people, in fact, worldwide, this whole socialism movement you see is a result of what the banks have done. People figure they have nothing to lose. And then that means the governments around the world take full control, not nominal control, of these central banks. And the people who've been acting behind the scenes, the shadow governments around the world, will lose power. And it'll become overt. So they're going to do what they have to do. And there's only two things that really stop these guys at the end. It's going to be the price of fuel and the price of food. And I think this whole climate crisis thing is an attempt to marginalize the need for fossil fuels, but that'll fail completely as well. Not to mention control. So with that monologue behind us, let me just talk through the charts here. This is the weekly of gold. Okay, this is basically the CFT of gold. Is a continuous contract. August of last year we bottomed out. You know what happened September to December, right? The stock market went down quite a bit, and gold was a haven for that, and we got pushed up. And if you notice here, we like buying things that get the 2 standard deviation. This is a weekly chart, so I give you some perspective. And this dot here is one of my things that scream me to reversal. Okay, we call this slingshot. And it came up, we got a slingshot here saying, hey, the move pie was too far too fast. We got consolidation. If you notice here, this is the 65 period moving average. I prefer this over the 50 and the 200 and the 20 and all that other good stuff. This is my bull bear line. And if you notice, it came right back down, touched it, didn't breach it, and then it took off again. And then we had this mega move here starting in June. And now we got up to a point where we almost touched the it broke the 3 standard deviation here on the static, and then looking here, it's still at 2 standard deviations of the dynamic linear regression, and looks like this is a bull flag to me. So now the only way I'll see this as a failure is if this low right here gets taken out. So if you're long gold and silver, then look for anything closing, this is on a weekly basis, closing below 1460, 1480 area. Then you can say, okay, this move has failed, and then we start looking back to see where this thing touches. All right, but this was a big move. I'm not surprised it's consolidating. I'm more surprised that it's already getting a bid. That means there's more to come. So just keep an eye on that. And I'm going to show you oil here really quick, because they're having a problem with oil. So I don't worry about too much. There's too much of it. And the only thing about oil that is concerning is that a lot of traders use oil as collateral. So they own oil, and then they pledge their oil assets to buy stocks. And if you notice here, I don't know what led what, but oil collapsed at the end of 2018, and the stock market followed. Just FYI. And this is the shoulder season, and here we never really got back up higher. It's really been struggling, and we had this. This is the quote unquote the attack on the Saudi Arabian oil fields. I think this was the most transparent wag the dog I've ever seen, false flag, whatever you want to call it. And I think this is going to end in abject failure, and I think we're going to come down and we're going to test these lows again. We just have too much oil. It's coming out of our ears, and oil prices, I think, are going to fall. And so I'm backing that up because we're short oil, and I think we're going to be just fine. This whole move here, I'm still up on my short. I just didn't even waver. I said there's just simply no way. Trump doesn't want to go to war at all. The Iranians can't go to war. If they really, really got into a shooting war, they're dead. They only have one product and one product only. And they only have one huge, huge transshipment point. One island, Karga Island, okay? One bomb takes Iranians out of the modern age. So this is all bluster trying to move oil prices higher. And so just bear that in mind when all this wringing a hand stuff. And it was the most accurate drone strike I've ever seen in my life, okay? That they hit things that were inconsequential long term and nobody got hurt. So, FYI, and it came at a time when nobody was working. Seriously? I mean, how stupid do they think we are anymore? Alright, so let's flip over now to the miners here. Here we go. So we're getting some nice moves here. I'm just going to look at a few of them. AG is one of my favorites. Okay, I think it's ready to take another move. I put this fib line in here. I drew this out a couple weeks ago. As you see, I said this is probably the area to buy. And it looked like it hit it exactly. All right. You can say I'm the trade genius, but it looks like math just simply worked there. And this is, to me, as a consolidation on high. And I think now it's going to probably test these highs here once it breaks off this fib line here. And this is one you just kind of want to own whenever it gets weak. I don't trade on the weekly. I'm just showing you for perspective. And AG can really go, okay? So I think there's a double in this thing, all right? This is where you want to look, and then you look again at what happened in 2011. So I think AG has a double left in it, all right? Unless it gets really crazy out there, then sky's the limit with all this stuff. Okay, let me go in and show you GDX and GDXJ. Okay, to me, consolidation on high, got another buy signal here in the weekly. We went back and we've traded GDXJ now twice. Okay, this just in the last week. And I put this thing in here because I'm monitoring for myself, and I'll go down here. So we did 2 trades on this thing. We're a little cautious going into the Fed meeting, but we caught this move here. We had a buy signal here, but it was trending down. I was getting a little worried. So we put what's called an OCO order in, cancel if the other one fills. Basically, we put a bracket in. The lower bracket filled. We shot up and we got stopped out, which was okay. And then we turned right back around after the Fed meeting. It broke down again, and then it started coming back in. And I said, let's jump back in this thing. Money flow is looking good. There's people bidding on this thing, and as of Friday, we're up another 5%. So we're 11% here in the last 3 days, and we're still counting. The only thing I'm watching here is this going to cap it. And we moved our stop up, and I'll move my stop up again. If we get stopped out, we get stopped out. I'm not picky. I'm going to make money wherever I think things are moving. So, but it could just blast through right here. So just FYI on that. GDXJ is where you want to play. The junior miners always will move faster, and it's interesting that they did move. The other one I like and I watch all the time, and I own this one, and I've owned this one for a long time, is GOLD Barrick Gold. This is kind of where the institutionals play. And let me go out to the weekly again. Okay, and see, I wrote this thing out of here again. Let me just clear that off here. So these reversal areas here, you look to buy, okay? And we had one here, ran up. I mean, these are just nice moves. These are 20% moves, all right? 10% move, 10% move, and then here we got a move here, and basically almost a double, all right? Came back down. I just bought back in again, 1750. And I think now it's going to take out the top. And so that's what we're watching on GOLD. Hecla, it's kind of been beaten down. I wrote this out. It's putting in a nice cup and handle here. It's ready to break out right now. If it breaks through this moving average, it's going to 320. Okay. We bought calls on KCG. I think there's a bit bull flag. I put this in here. It's break through. I think this thing rockets. Okay, this is the move here. So you have this thing at 321 to 450, right? You get the consolidation here. It's breaking out. You know, you have another dollar move in this thing here on KGC. I like MAG. I don't know why it's still struggling here a little bit. I'll just let it come back around, but we'll jump back in MAG again, and then here's the one I missed. Somebody brought this to my attention. You think doing this all these years, you think you've been watching all the right things. I totally missed North American Palladium because I was always watching PAL, P-A-L-L, and then I never even saw this one. How stupid am I? And just really nice moves. But I did playing platinum. And so we got a nice move here. I think Palladium's going to go. It's acting as absolutely acting as an inflation hedge here, even though it's for the car market. It's a precious metal. It's controlled by Russia. So, you know, they could play games with this. They like to make money from this. But PLG is what we've been having a lot of fun with. Okay, we've made 25% in the past month. I'll zip down on this. Okay, and we're in again. So I haven't wrote this one back up. We got back in at 169. Okay, and now we're at 183. So we're up about, let me just zoom in on it here. I'll do it. So, give me 1 second. Nothing like little radio silence there, huh? So here's about 169. And then we're here right now, so we can add to it. So we're up another. It's not really 10%. It's like 9 point something, I think. Yeah, it's 10%. How about that? So we're up another 10%. So here's the 3 trades here in the last month. All right. So pretty sweet. And this one here, I'm so annoyed at myself. I get too conservative sometimes. But here, 17%. I thought that was probably pretty good, and then it went doubled on me, and then you got 9% and 10%. All right. So we're at 35% here in a month, just trading PLG, and it's just rinse and repeat for us. So I don't see any of this stuff changing. All these people saying, you know, oh, we're going to this massive deflation. You know what? Let it happen. Don't let these guys scare you out of stuff when they're wringing their hands. Let the market tell you what to do. For me, you know, it's all systems go on buying the dip unless this gets breached. Okay. If it gets breached, then I'm looking to buy the dip when it comes down to these -2, -3s. It's all you need to do to trade, you know, and just ignore the news and the noise. I'm aware of it because I like to see if there's something around the corner I can take advantage of. But you got to realize social media is just a lot of narrative building, and you just want to go ahead and just trade what's in front of you. So anyway, that's all I want to talk about right now. I'll talk about the indexes are next. I really appreciate you guys listening. Trade with us. You'll make money. We're doing really well, and we have special. They're expiring tonight. Love for you to join us. You know, I don't promise you Lambos, but we certainly help you make money every day, and we'll teach you how to do this for yourself. And we'll give you these same tools that you can put right on your on TradingView and trade things that we don't trade. In fact, this PDLF thing right here, another trader was trading and brought it to my attention. So a lot of things you can learn and from each other and make money. And I learn stuff every day. I've been doing this for 30 years. Every day I learn something new. And as long as you're open and you're a sponge, you'll profit. Thanks for listening. Bye-bye.